Good evening, everyone. Welcome to tonight's program. My name is David Matney with Nebraska Realty on the Living in Omaha channel. And I don't know if you can hear me or not, but let me know in the chat. I know last week we had got started. I was going for like 2 minutes and nobody could hear me. So hopefully, if someone can give me a heads up in the chat, let me know that you can hear me okay. And we can move on with tonight's program. All right. Are we out? Anybody can hear me. Just give me a thumbs up or let me know in the chat if you would be so kind. All right. Hopefully, we'll get somebody on board here. All right. Well, anyway, we're going to proceed like you can hear me. So, everyone's talking about the Fed cutting rates for the first time in 9 months. Mortgage rates have already dropped to an 11-month low, but are they going to keep falling? Okay. Or are buyers going to be disappointed? So, tonight we'll break down the truth between the headlines and what it actually means if you're buying, selling, or refinancing in the Omaha area. Okay, and we got some folks in the chat. Hey, and Clark's here. Clark the Realtor. Okay, Clark can hear me? Okay, terrific. Thanks, Clark. I appreciate it. And we have David B. David B. is in the house. So welcome aboard, David B. All right. Well, let's dive into tonight's article. And this is from realtor.com. And it says, does a Fed rate cut mean, what does a Fed rate cut mean for mortgage rates? Okay. And we'll dive into tonight's article. In response to mounting warning signs from the labor market, the Federal Reserve is preparing to cut its benchmark interest rate for the first time in 9 months. And most economists and investors expect Fed Chair Jerome Powell and the rest of the Federal Open Market Committee, the FOMC, to cut the central bank's overnight rate by a quarter point on Wednesday. Mortgage rates have already fallen in anticipation of the move, with the average 30-year fixed rate reaching an 11-month low of 6.35% last week. And we'll take a look at uh, Mortgage News Daily, and I'll share this tab with you. And this is going back. This is the 30-year fixed rate mortgage. I'll make it a little bit bigger. Hopefully you can see it a little bit better. Okay, this is the 30-year fixed rate mortgage. And you can see where we're at now compared to so interest rates are moving in the right direction. So that's good news if you're a buyer, because that's going to give you more buying power. Okay. Um, and we can see that you see a wild fluctuation. You can see earlier last September. Now this is leading up to the election. Rates took a little bit of a dip before the election, and we're down to 6.11%. And then come election time, they got back up to 7, and then they've hovered around 7. And then lately, since May, they've been on a downward trend, which is a good news if you're buying a home. All right, we'll go back to this article. All right, as it comes as welcome news for prospective home buyers who stand to benefit from the lower borrowing costs. However, for those who are holding out in expectation that mortgage rates will automatically fall further after the FOMC meeting, disappointment may await. That's because financial markets have already priced in 3 25 basis point Fed cuts before the end of the year, and 3 further cuts of that size in the end of 2026. All right. So, all right. Hey, it's MH08. I got to say FOMC and MH08 in all this evening. So that'll be fun. Welcome aboard. Thanks for stopping by, MH08. All right, terrific. What they're trying to say though with that is what happens is the market already is anticipating um, the Federal Reserve cutting rates. So that's already kind of baked into the cake in terms of there. A lot of people are going to think they'll hear the news that wow, they cut it 25 basis points, but that's doesn't. You can have it. Remember, interest rates follow the bond market. So even if they decide if they cut rates tomorrow, interest rates depends on what the 10-year Treasury yield does. That can actually go up. So in that case, uh, it doesn't follow the Federal Reserve. What that rate is, that's what they charge other banks for overnight loans. Okay. Going back to the article here. This means that markets have high expectations for the Fed upcoming rate cuts, and the markets could be very well disappointed by a slower Fed pace, says Realtor.com chief economist Daniel Hale. And then this is the black line is the federal funds effective rate, what they're charging other banks for overnight loans, and then mortgage rates are in the red line here. And you can see, like looking at this chart, I don't know if you can tell or not, but when it was staying flat, you can still have a wide variation in the mortgage interest rate. So just because it goes down, it went down in 2024, but look what happened. Interest rates went down, but then they went back up because again, they're not following in tandem. Okay. If the FOMC decision is contentious and split with dissenting votes against the cut, or if policymakers issue forward guidance that doesn't match the market's expectations for future rate cuts, mortgage rates could move higher in response. A similar scenario played out in September of 2024 when mortgage rates plunged to a 2-year low ahead of expected Fed rate cuts. But then rates began rising as it became clear that the Fed cuts would not be as extensive as the market expected. Although mortgage rates have fallen in recent weeks, they have not yet reached the lows near 6% seen in early of September of 2024 when the federal funds rate was a full percentage point higher than it is today. I expect this drop in mortgage rates to continue at least until the upcoming Fed meeting, says Hale. After the Fed meeting, however, I expect mortgage rates are more likely to steady or even edge higher because markets are positioned to expect relatively more easing and could be disappointed by the Fed's forward guidance. And what the Fed is doing, the Fed has two mandates. They want to maintain stable employment and curb inflation. Okay, well, let's take a look at the inflation numbers here. Okay, and I'll share this with you here. Okay. Okay, this is the United States inflation rate, and you can see where this is going back 1 year, and you can see every month it's gone up since April. It's now at 2.9%. Well, the Fed would like to see it at about a 2% rate, but let's go back 5 years. But you can see back in July of 2022, how inflation was at 8.5%. Well, what did the Fed do at that time? Well, they want to take money out of the economy, so they raise interest rates to slow down the economy. Well, they raised interest rates, and guess what? That inflation came back down, and so it's been hovering at around that 3% point. Okay, now before the pandemic, we were at 1%, so it was really nice back then, but it's been higher since then. So, but they want to keep track of the inflation rate, and the other thing they want to keep track of is, in terms of their dual mandate, is the unemployment rate. and you can see that when unemployment goes up, when they raise interest rates, that slows down the economy, but they got to be careful because they don't want to raise it too much. Otherwise, that'll spike unemployment. So they're kind of doing a tap dance and they're trying to balance that out. But you can see, and this is for the Omaha area economic summary, but you can see in the United States, and this is the dark line is July of 2025, and the light blue is 2024. So unemployment went up a little bit, okay? But if it were to go up a great deal, they would take and lower the the Fed funds rate even more. But if they have too high of inflation, then they want to raise the interest rate. So they're trying to do a balancing act. Okay. Go back to the article here. All right. And I can't remember quite where we were, but we'll jump in here. Although mortgage rates have fallen in recent weeks, they have not yet reached the lows near 6% seen in early. I think I read that part before, when the Fed funds rate was a full percentage point higher than it is today. I expect. Oh, we read that part. Sorry about that, gang. The Fed does not directly set mortgage rates. Which instead tends to follow the yields of long-term bonds. Those bond markets are influenced by investor expectations about future Fed policy and financial conditions, including inflation and government deficits. Well, we got plenty of government spending, so that's no joke there. In a call with reporters last month, National Association of Realtors chief economist Lawrence Yun warned that higher inflation and concerns about mounting government debt could put pressure on mortgage rates despite the Fed easing. Mortgage rates might not decline even with the Fed rate cut if there is high inflation, and also if somehow the Treasury debt issuance becomes large. He said that's going to prevent the mortgage rate from meaningfully declining. Okay, and then we got a whole lot of political drama going on, and the Fed has long taken pains to preserve its independence from political pressure or influence, but that tradition has been challenged in recent months by President Donald Trump's public pressure campaign for lower rates. And there's always going to be political pressure involved. Okay, but it's good that the Fed is neutral. Actually, what really should happen is Congress should do their job and balance the budget, but that's a whole nother day. Instead of relying on the Fed to manage the economy. Soon after starting his second term, Trump began publicly demanding lower rates at various points, threatening to fire or sue Powell. Now, he doesn't want to do that because he may want to fire Jerome Powell, but that might be even worse because the market is not going to like that as well. So Powell's term is up next year, so he'll be able to appoint somebody at that point. Okay. Trump has said that lower rates would help the government refinance its massive debt on more favorable terms and also boost the housing market, which is true. Powell has resisted, and he's resisting because there's still inflation out there. So he's trying to keep that tamped down, that inflation. Okay. Inflation is a hidden tax on everybody. Inflation is really insidious. You got to get a hold of inflation because that can, like I said, we had inflation in the housing market. Now what do we have? We have homes that are unaffordable. Okay. Powell has resisted, however, telling Trump at a White House meeting in May that the central bank's future decisions on interest rates would be based solely on careful, objective, and non-political analysis, according to a Fed statement on the meeting. But here's the other thing too. They're human beings and they make mistakes as well. When inflation, back, I'll pull up that inflation chart here. Okay. When inflation was going up, remember after uh, President Biden was elected and inflation was starting to go up, and every month after month we kept seeing 5%, 6%, and all that time we were told that inflation was transitory, and lo and behold, that wasn't the case. So now it's easy to Monday morning quarterback on a podcast, and play, hey, if I was Federal Reserve Chairman and all that sort of thing. It's real easy to look at this chart in hindsight and say, yeah, this is what they should have done. But they should have put the brakes on the economy back then. They should have raised rates back then. Everybody knew that they were going to raise rates, and you kind of just thought, well, it's going to be coming. It's going to be coming. And then we had that wild market in 2021 and 2022, and you knew eventually they was going to raise rates. Well, they did. Okay. Oh, I'm not even showing you the chart. Sorry about that. All right, here we go. This is what I was talking about, is in terms of, in 2021 and 2022, all this time they were telling inflation was transitory. Well, it wasn't transitory. And then when they finally raised rates, the Fed funds rate, then inflation started coming back down. But for a long time, the Fed is not, everybody involved in this thing is all human beings. So people are going to make mistakes, and they're trying to do the best that they can. But you don't want to, you want it to be independent, and you always hope that it's independent, and you also hope that they're competent. Okay. So, but that's neither here nor there, but we'll go back to the chart here. Okay. Or the article. The standoff has intensified in recent weeks with Trump's attempt to fire Lisa Cook from the Federal Reserve Board of Governors over allegations of mortgage fraud. Now, you would think if you're a Fed governor that you wouldn't commit mortgage fraud or have that appearance. Now, I don't know the particulars with that situation, but trust me, if somebody on the, I don't care if you're on the left or the right, if you're doing something that the other side doesn't like, they're going to dig up as much dirt on you as possible. Okay. Cook, a Biden appointee, had supported Powell in holding rates steady the last time the FOMC voted on policy in late July. She is currently battling Trump in court and is expected to vote on Wednesday after a judge temporarily blocked the president's attempt to remove her. The FOMC has 12 voting members, but is currently down to 11 after a Board of Governors member, Adriana Kugler, resigned abruptly without explanation last month. I don't know. This person probably committed mortgage fraud. I don't know. I'm just speculating that, but I don't know. They resigned for some reason. Who knows why? The resignation of Kugler, also a Biden appointee, gives Trump an opening to add a new voter to the FOMC who is sympathetic to his vision of easy money. But again, easy money sounds great. But again, if you put inflation is too many dollars chasing too few goods. If you make more money available, then that drives up inflation. Just like during the pandemic, they were handing out cash. And what did that do? You put a whole bunch of cash into the economy. That drives inflation higher. Okay. Let's see. Clark says he is trying to find a way to get one of his people in that Fed circle to hopefully push the interest rates down for his purposes. And that's true, and here's the deal. Time will tell. And, here's the other thing too. You can't ultimately, if, we won't know who's right until you look back in the rearview mirror. But if, let's say he puts his people in place there and inflation goes higher, then we're back to the same problem we had a couple of years ago, So, um, and maybe he puts the person in there, and inflation stays um, in control. So, yeah, I mean, all politicians are. What's kind of funny is I believe Jerome Powell. Correct me if I'm wrong. He was appointed by President Trump in 2019. So I think Powell was one of his guys in Trump 1.0. So uh, let's see. But we have to think about the big picture and the American folks. Absolutely, and who's to say? Time will tell who's right. So, but Jerome Powell didn't get it right before, so I can see where there's some angst there. But um, you know, um, let's see. It also looks like she put down that property was a vacation home in Michigan. So, and I don't know the particulars on that. I mean, if it was a vacation home and she got a loan on it, then hey, that's all. Um, you know, I don't know. I mean, hopefully, I mean, just because somebody, if you don't like somebody's vote on something, they dig up a bunch of dirt to get rid of you. That ain't, I mean, anybody, anytime can have dirt dug up on them for something, nobody's, I don't know. And then Clark says, yep, he was. And then, yep, he was. Yep. Um, The resignation of Kugler, also a Biden appointee, gives Trump an opening to add a new voter to the FOMC who is sympathetic to his vision of ease and money. The replacement, he has nominated White House economic advisor Stephen Moran, who may be confirmed in a Senate vote on Monday evening, which would allow him to participate in the FOMC meeting this week. If confirmed, Moran would be the first sitting White House official on the Fed's board in modern history. Okay, shattering precedent by and adding a new political dimension to the central bank's governance. Yeah, that's not, mm, you know, ah, um, that has some problems to it. Whether you're on the, if you was on the, if you're on the Republican side, oh, that's okay. But if I guarantee you, if it was on the shoe was on the other foot, there'd be a whole lot of folks um, upset about that. So uh, let's see, MHO8 says I wouldn't mind a vacation home in Michigan, except for the deer flies. Yeah, I'm with you on that. MHO8. All right. Why is the Fed cutting rates now? The Fed uses higher rates to curb inflation and lower rates to boost the job market, the two halves of the dual mandate to maintain steady prices and maximum employment. Citing fears of lingering inflation, Fed policymakers have held the central bank's policy rate steady at the range of 4.25 to 4.5% since December. Now, a string of alarming reports revealing weakness in the labor market is finally prompting the FOMC to act, as well as giving Trump and other critics support for their contention that the Fed has waited too long to act. Okay. The initial blow came in early August, days after the last FOMC meeting, when the Labor Department issued a sharp downward revision to job growth numbers for May and June. And then there's the other thing too. Uh, how are these job numbers measured? I guess it's by some survey of some sort type of thing. So they're always doing revisions to it and all that sort of thing. Subsequent revisions show that the economy has added just 27,000 new jobs on average each month starting in May, far below the 100,000 pace viewed as necessary to prevent rising unemployment. Okay. As well, there are now more unemployed job seekers than job openings in the country for the first time since 2021. And last week, new unemployment claims, a sign of layoffs, jumps to their highest level in 4 years, which would make sense to lower rates at that point. All of this provides the Fed with ample reason to cut rates. However, at the same time, inflation has begun to rear its head again, with the overall inflation rising to 2.9% annually in August, presenting the Fed with a thorny dilemma. Even though inflation has inched up again and remains above the 2% target, the Federal Reserve is giving more weight to the labor force numbers and will cut rates to help stave off further deterioration, says Bright MLS chief economist Lisa, uh, I don't know how to say her name, Sturtevant. Given inflation is still above target, however, I expect we will see a 25 basis point cut and not something larger this month, while future rate cuts may be more dependent on the inflation trajectory. Okay. Um, MHOH says, "Thank goodness I'm closing in on retirement." Well, good for you on closing in on retirement. But here's the scary thing for retirement is if inflation um, goes up, guess what? Once you're retired, you're on a fixed income, and if let's say you have some money set aside and saved up, the if inflation goes higher, that's eating into um, it's making your dollars worth less. So those folks that are retired and things like that, when prices go up, they can't, they're stuck. So, but good for you, MHOH, for being close to on closing in on retirement. That's awesome. So that's kind of so what do you guys think? What do you think interest rates will do in the chat? What do you think um, interest rates will do? Do you think they'll go up? Do you think they'll go down? What do you guys think in the chat as far as what interest rates will do? Okay. LOL, I can cash flow my paid off property. Well, congratulations. That is awesome. So, yeah, yep. And Clark says, congrats. Yeah, that's awesome that you're close to retirement. Clark, what do you think interest rates are going to do? Not that, Clark has this magic crystal ball. If Clark does have a magic crystal ball, everybody likes to talk about what rates are going to do. Nobody knows what rates are going to do, but I think they'll stay the same or possibly go up. Yep. I think that's a good point. Yep. And PGMP down a quarter or down a half. Okay. It would be wonderful, as a real estate agent, when you look at the number of closed sales, the number of sales are way down. So, um, you would, if rates were to go down, that's going to make things more affordable. Okay. Um, all right. I don't know what that little thing is there, but some sort of emoji. Nope. Okay. Clark's talking about his. Clark, if you had a magic crystal ball, you can tune in every Sunday night at 7 p.m. to Clark's channel. And let's see. I don't know exactly what the stock market is going to do tomorrow. Yeah. And that's, and here's the other thing too, in terms of, all of this is noise. Okay. If you're in the position to buy a home, I wouldn't let what happens in the Federal Reserve stop you. If you can afford it and buy your home and do all of your due diligence, and if you have some money saved back in reserve, then I don't think there's anything wrong with buying a house. Okay. But you got to make sure that it's affordable and within your budget. Now, the problem is it takes so much money for people. It takes two incomes and two decent incomes to buy a home. And if you're in a market like New Jersey or New York or San Francisco or some crazy market like that, you either got to be 45 years old and making a ton of money in dual income and all that sort of thing. But in those kind of a market, I don't know how people can buy a home. I mean, there's plenty of people living there. So even in MH08. Even in Denver, prices are so much higher compared to the Midwest. And let's take a look here, and I'll show you what's going on in the market right here. Let's see. Share this tab instead. Okay, this is Douglas and Sarpy County. The median closed price, and this is monthly. We're at, for the month of August, the median closed sales price in Douglas and Sarpy County was $330,000. Okay, now if we go back, let's go back 5 years on this, and August of 2025 we was at $330,000, and if we compare that to August of 5 years ago, we was at $242,000, or about $243,000. So it's amazing to me how much prices have gone up. But I think what you also see by this graph is, now you're starting to see prices level off. Okay. And you're always going to see prices peak. And you typically see, in a market like a real estate market like Omaha, there's going to be a seasonality to it. Okay. And what you see is July of 2022, it has a peak. In July of 2023, it had a peak. And then June of 2024, okay, peaked. And then now you start seeing it level off. Now, if we change this from monthly to a rolling 12-month average, we're going to smooth out that seasonality. Okay. But you see prices starting to level off. Okay. Now that's, now let's look at the number of closed sales. Okay. Clark has buying a home is definitely a good investment for your future. If you want to own, home, remember to buy what you can afford. Absolutely. Clark, you're 100% on that. The problem is it shouldn't be so unaffordable as it is. But then it goes back to, again, inflation, and there was too much money. Money was so cheap, and you know, and we had. If you look at, let's go back and look at mortgage interest rates. Okay, this is. Let me show you share this tab with you. This is the 30-year fixed rate mortgage. Okay. But let's go back and look 5 years ago and look what the 30-year fixed rate mortgage was back in September 18th. Okay, 5 years ago, we were looking at a 3% mortgage interest rate. Yeah, so that's just incredibly cheap money. And then you can start to see right at the beginning of 2021. Look what, or excuse me, in 2022 is when interest rates started to take back off, and this was amazing to watch, because one concern out there is that when you buy new construction, you can't lock your rate until 45 days out. So if let's say we're building a home, and let's say you contracted on that home in September of 2021, thinking, okay, what is, it's going to take 9 months for this thing to be built. And then all of a sudden rates went from, 3% up to 7%. That's why you had all of those new construction being canceled, because, hey, people could no longer afford it. Okay. But builders are smart. Builders, when they look out to the marketplace, and if they don't have a buyer on the horizon, they're going to tamp down the building. They're not going to build as many homes. Okay. But to me, it's amazing to look at this chart. Okay. Let's max out this chart, see what it looks like. Okay. This is going back, way back to September of 1981. Look at, those days. Mortgage interest rates in the 17%. I mean, that is ridiculous, you know. Yeah, that, I mean, that was, but we had Paul Volcker was the Fed chairman at the time, and what he did was he raised the Fed funds rate in order to kill off inflation, because in the late 70s we had all kinds of inflation, and then in 82 we had a really steep recession because they had to uh, put the kibosh on inflation. Okay, so let's see. MH08 said, I had a rough start, but I bought in 2005 and to ride out 2008 and 2010. And that's a great point, MH08. And that is, if you buy, you got to look at it long term. Buying a home is not like buying a stock where you can go crazy watching the price fluctuate month to month. That'll drive you crazy. You got to look at it as a long term thing. And I bought some homes in the early 2000, and when 2008 rolled around and 2010 rolled around, I'm like, well, hey, I'm upside down on these things, or I was flat, but I wasn't selling. There were rentals, and I was just continually renting them out. So, yeah. Clark says we can never predict when to purchase at MOH, but you held on, and now you possibly should have equity in your property. Absolutely, probably a ton of equity. You know, so that's good for you to ride it on out. Okay. Let's see. PGMP says, is there a correlation with the mortgage delinquency rate? That is a good question as far as, or do you mean in terms of mortgage interest rate and the delinquency rate? I'm not quite sure. I think there would be a relationship between mortgage delinquency rate and unemployment, but I'm not sure as far as maybe maybe I misunderstand your question on that. MH08 says over 90%, Clark. Yeah, good for you. Yeah, that's awesome. All right. I know homes are high in Colorado. Yep. A lot of folks are a lot of folks are high in Colorado, Clark. Not just the high prices. I mean, not just the prices. So. All right. Let's see. Hello, I would have been happy with this dump being worth 120,000 now. All right. And then and so are most of the people here. Yep, I'm sure. Oh, okay. All right, that's awesome. That is awesome. All right, let's see. PGMP says mortgage delinquency rate and the median home price are starting to spike. Higher home prices equal more people failing to pay their mortgages. I think is if we're starting to go into a recession, I think you would see mortgage delinquency rate go up and median home prices. I think at that point, I mean, if you start seeing more folks losing their homes, then that's going to put more supply out there. You have less demand, and so what would prices do? They would come down. So if you're a buyer, that would present an opportunity. In any market, there's going to be opportunity. Now, you don't want folks to lose their homes and whatnot, and that's why I'm always you'll hear me pound on the table about making sure that you have enough money in a reserve fund, because if you do get laid off, you got to have enough money to continue to make your payment and that sort of thing. Hey, we got Fred Sacco in the house. All right, Fred. All right. Welcome to tonight's program. Go Big Red. Fred is a guest host on Monday night Corn Nation. So if you like Cornhusker football, then be sure to check out Fred on Monday nights. He's with Minnie over on Corn Nation, so it's a good program. All right, let's go back and look at the. I want to show you guys in terms of this is the median closed price, but let's look at closed sales. Okay. And this is a 12-month rolling average. Okay. And you can see that in 2020, in the, when rates were, um, once rates start going up, what happened? The number of closed sales went into the tank. Okay. And now we're below 11,000 sales per year. Okay. As opposed to um, 2022 when we had 14,000 sales. So let's see. PGMP says investing in your house is like investing on a good bed. You have to do it since you're going to use it all your life. That's a great point. Exactly. Um, all right. Good point. And then MH08 says, even if I sold this place at a loss of $25,000 today, that's $104 a month in rent. Pretty darn cheap. Yep, exactly. But in terms of number of sales, uh, you can see where the sales have gone down. Now, this is a 12-month rolling average. If we look at it from a monthly standpoint, okay, this chart changes. Okay. And this is the number of closed sales every month. So in August, we had 946 closed sales for the month of August. Well, how does August of 2025 compare to August of 2022? Okay, we had over 1,100, 1,178 closed sales. So the population of Omaha has increased, yet we're selling fewer homes than we did back during the coming out of the pandemic. All right. Um, and did I forget to add that my amount to add that amount to my current payment, which is next to nothing? All right. Awesome. Now I'm going to take this out and I'm going to stretch this out. I'm going to go back and the other thing about this chart, and I'll just throw up the 5-year point, and that is you tend to have, in terms of closed sales, more homes at peak. Remember how we said that prices peak in the summer? Well, the number of closed sales tends to peak in uh, June, because that's when the most number of, and then what happens is you go into fall, sales decrease. And then what happens during winter is they bottom out. So the bottom of these troughs are going to be January, February. Okay. Now, we're already at 946. So we're going to have fewer sales as we go into fall. But here's the deal. If rates go down, then guess what? You're going to see sales pick back up. Okay. But looking at this chart, this is going back 5 years. Okay. If we max out this chart all the way back to 2003, okay, what I think is interesting is August of 2025, we had 940, and this is hard for you guys to see. Okay. Um, August of 2025, we had 946 closed sales. Go back, and we didn't have this many. It was August of, um, let's see, August of 2011, we had 833. So that was right in the middle of the Great Recession. We had fewer homes closing than we do now. Now, keep in mind, that's, how many years ago is that? Okay, what is that? 14 years ago? Or yeah, 13, 14 years ago. The population of Douglas and Sarpy County has gone way up since then. So this is the number of sales. But all that means is those buyers are still out there. They're just sidelined. And that's why you have all of these apartments buildings being built. Okay. But I think that's really interesting to look at the number of closed sales going back. And again, there's a fluctuation to it. Okay. This is, let's go back to closed sales, and I'm going to go back 5 years, and then I'm going to show new construction. Okay. Now what we're seeing is this green line is new construction. Okay. Do you see how new construction is just a small portion of the total real estate market? Because new construction tends to be higher in price. And so they're not going to sell as many. And builders are not going to go out there and build something unless they have a buyer for it. But, and they're going to sell homes all year long, but you'll still see it'll peak, but it won't be, it's not as, you don't see the seasonality like you do in the existing market. This is the existing market in red. Okay. Um, but I think that's pretty interesting. Okay. And then MH08 says, I see higher lows. Okay. Now, the other thing I think is pretty interesting is, speaking of new construction, let's talk about the price of lumber. Okay. This is the price of lumber. Okay. Lumber there. And let's go back, and this is if lumber becomes less expensive, well, then that means there's less demand for lumber, so they're going to build less homes. And so what you're seeing is lumber since August has come down in price. Well, they're anticipating interest rates going down. So what does lumber do? It goes back up a little bit. So it's kind of like a teeter-totter as far as one goes up, one goes down type of thing. But I think what is really fascinating in this, looking at the price of lumber, is this is lumber going back over 10 years. I just kind of like to nerd out over this stuff. I don't know if you guys find it fascinating or not, but I find it, I think it's kind of interesting. Look at the price of lumber during when they shut down those mills. Lumber shot up to almost $1,700 for 1,000 board feet. Okay, they shut down the mills. So what they do? They decreased the supply by shutting down the mill. And what did that do to the price of lumber? It spiked. And then they had all of those pandemic restrictions to where they had, they couldn't import things. So you had homes that weren't being completed, and they couldn't, depends on what state was considered an essential worker or not, whether construction was. If they weren't building at that time, that, but I think what's fascinating is looking at the price of lumber here. But as you can see, lumber's not really, there's nothing really sexy about lumber. Okay. Never mind. Lumber kind of lumbers along there. Okay. But then it went crazy. But, since then it's been around that, mid 500s. But, let's see here. MH08 says nerding out. That's why we're here. Okay, terrific. Anyway, I think that's pretty. Hey, Zaretha. All right, awesome. Well, welcome aboard. Thank you for stopping by. Excellent. All right. Well, we're just talking about the price of lumber. Nothing too exciting, but I think that's so it'll be interesting to see how this all plays out, what's around the corner. But at the end of the day, here's the other thing too, all of the news, and I know everybody, goes all crazy over, all the noise of the market. But at the, somebody said it earlier in the chat, and that is just, or Clark might have said it, where if you look at it long term, you're going to be just fine. Okay. Okay. And looks like lumber went crazy at 2020, then it stabilized. Exactly. Yeah. So that's all right. Anyway, that's the scoop for and then I thought I'd bring up a mortgage calculator. Okay. And if you take the home price of the median closed sales price for August of in the Omaha market, let's say at $330,000, and we're not going to have any. We're not going to look at um, taxes or insurance. We're going to just zero that out for the sake of this example. Okay. All right. So 330,000 with a 20% down payment, 30 years at an interest rate of, let's say, 6%. Okay. What is your monthly mortgage payment? Okay. At 6% and this is just principal and interest, would be $1,500 a month, $1,583 a month. Well, if rates go down to 5%, what is it? Update. It'd go down to $1,400 a month. Okay. Now, what'll rates do? I mean, who knows what rates are going to do? But again, when rates go down, homes become more affordable and people can come off the sidelines. But there's still buyers out there. Um, you know, and I had a couple other questions. I thought, well, I only got one article tonight. If there's any other, um, uh, let's see. PGMP says the American dream has evolved into both parents working to achieve the same dream. Yeah, I mean, what's, yeah, unfortunately it takes two incomes to buy a home in today's market. Unless you have one person, the breadwinner making a really good chunk of change. Yeah, that's, and those are, and here's the other thing too. That's two incomes that are buying. You're not buying a castle, you're not buying something, um, that crazy, but I mean, yeah, but if you fall on hard times or if one of you get laid off, then they're going to, hey, that's going to be some trouble there. So, I had another question about, I asked ChatGPT what are like 5 of the most common questions that people have when they're buying a home. And the first one that came up was, how much can I afford? Okay. And basically, that's going to vary person to person. Okay. And and this is really important because everybody tells you to go out there and get pre-approved with the lender, which is the right thing to do. But just because a lender says, hey, you're approved for a $400,000 house, that doesn't mean you should go out there and buy a $400,000 house. Okay. Because you don't want to buy something that's so high in price that so much of your income is going to just make your monthly payment. Then you're become what they call house poor. So uh, you want to make sure that you stay within your budget. Don't let somebody else dictate what your budget is. Okay. Um, and then Zarina is exactly right. You have to factor in escrow too. And that's the problem that we've seen lately. And we've talked about this on the live stream, and that is how much taxes have gone up and how much insurance has gone up. Nebraska is one of the highest states out there in terms of insurance. So, in some cases, sometimes the best thing to do is to not buy a house. I mean, if you can't afford it, or if you're barely getting by and you're buying a lower priced home, because I mean, I'm all for people buying homes. Okay. I sell real estate for a living. But honestly, if you're buying something and it is going to eat you alive in terms of maintenance, and a lot of people don't factor in maintenance just to maintain your home, especially a lower priced home that's 30 or 40 years old. That's you Furnaces go bad, they don't last. All these systems now are not designed to last forever. So you have to budget in enough for maintenance. And if you got to budget in enough for maintenance, and you got to budget in enough for um, increases just in your taxes and insurance and that sort of thing. And on top of that, you got to save for you got to have money set aside for a rainy day in case something were to happen to your job. And then you have to should always be putting money away towards retirement, so someday you can be like MH08 and retire. But if you're not being able to save any, now here's the problem: most people can't even save money for a down payment, so they never get off they would like to get into the American dream, but they just simply can't because prices are so high, insurance is so high, everything, inflation, um, and many other things. Exactly. So, you know, um, MH08 says my furnace is 40 years old, and when it goes, it goes. Until then, well, congratulations on having a 40-year-old furnace, because that's pretty remarkable, and that is still chugging along. Some of these furnaces nowadays, they don't seem to last that long. So, one thing you can do to if you're purchasing a home and you're afraid of an older furnace, and we've talked about this on the live stream before, is you can ask for the seller to provide you a home warranty. Okay, a 1 year home warranty. But um, there's a lot of things you gotta. And then the second question I was asking Chat GPT, because I'm like, well, what if I don't have enough material for the yeah, Clark, I agree. That's a good 40-year-old furnace. And you know what? MH08, it's probably a testament to how well you maintain it, because sometimes if you don't, it's just like anything else. You have to maintain a furnace. You got to keep the filters changed and keep it tuned up and all that sort of thing. So you want to make sure that good for you for having a 40-year-old furnace, but some people aren't even aware that they need to change the filters and everything like that. Okay. Let's see. I saw the governor sign a $20 million property tax relief executive order. Will that bring down taxes that much? No, that's a good question. I don't, that's a good question. And honestly, I don't know. I mean, anytime you have tax relief, I'm for that. Um, you know, the devil's probably in the details. And how much is $20 million when you, um, talking, you know, a state of Nebraska, and with all of the property that we've have, it's probably, no matter how much tax relief there is, it's always good to have tax relief, but it's, you know, how much will that be for an individual person? That's, I don't know how much, I don't know how much that'd be, but good question. It's probably something I got to look up and all that sort of thing. So, but I appreciate the question. Got a special nozzle that fits on my vacuum to clean it out, even clean out, even to clean out the squirrel wheel. So, yeah, I'll be honest with you, I'm not that good at maintaining my furnace, but hey, but good for you. That's why your furnace is 40 years old, and mine's not going to make it to 40 years. All right, no, that's good. Um, we kind of talked about the other question that I had, that it said that what are the total costs of buying a home? So your you got your down payment, you have your closing costs, you have your moving costs, and you got maintenance. So a lot of times people don't realize all of the costs that are involved with buying a home. Okay, and let's see. Okay, neither am I. All right, and then um, this is the other third question. It was what should I look for during a tour? Okay, um, that's a great question, and I think that can be a whole. I could probably make that into a whole live stream as far as what you should look for. I think I will say this, and that is, what's nice about the current market, it's not as competitive as it was, but the market that we're in right now, it allows you to go back and take a look at the property a second time, because the second time you go through it, you're going to notice a lot more than you did the first time. And uh, you're looking at the foundation, you're looking, um, and you're also using I look at the roof and I look at the foundation. The first thing I notice, of course, is the big tree in the front yard, because then I'm thinking, okay, if the house was built before 1990 and has a big old tree in the front yard, then I'm thinking tree roots in the main sewer line. So, but I look at the roof, look at the foundation, look at the furnace, and look at the mechanicals to see um, how well it's been maintained, and then look at the overall cleanliness. And a lot of people, I've been showing homes lately. Got out with a buyer last couple of days from Seattle, and we were looking at homes, and it was just like, man, if they just cleaned this thing, it would look so much better. So you got to remember, your first showing is online, but people are looking at a home really critically. So when something is dirt, and I'm not Mr. Clean, don't get me wrong, but I'm not selling my house either. But you got to look at things really critically as far as that goes. And then, um, you want to do your inspection, but you have a window of time to do any and all inspections. And that can be anywhere from, if you have an old furnace, you can bring in an HVAC technician to look at the furnace. If you have concerns about the roof, then you can bring in a roofer and look at the roof. If you want to do a radon test, Omaha has elevated radon levels. So, um, you can bring in those different uh, experts. Um, look at and this kind of gets overlooked too, and that is, look at the overall health of the trees in the yard. So not only do you have a big tree in the front yard that's probably got roots that are blocking the sewer. I'm not a fan of trees. Okay. So I know everybody loves trees, but I don't. But um, but look at that health of that tree, because guess what? When part of the reason why I don't like trees is because, as a landlord, when you got to cut them down, that's a lot of money, and they clog the sewer lines. The leaves get in the gutters. So you got to keep the gutters clean. If you don't keep the gutters clean, then you're going to have foundation problems, because you're going to have water get into your basement. So there's plenty of reason why, you know, anyway, that's uh, people have I'm not a fan of trees. I hope nobody's a big fan of the trees. So, funny thing about vision, a lot of what you see is what your brain remembers. That's why you see more the second time around. Good to know. Okay. Um, and then depends on the tree. Stinky sumac. No, just that name of that tree. I don't even know what that kind of tree that is, but if it's stinky, I'm sure it's not I hope there's no tree folks that are, but I'm just not a big fan of trees. I know people love them, but anyway, that's, yeah, no, that, anyway, that's, and, um, and when you do an inspection, you have three options at the end of that inspection. And you can say, hey, I'll take the house the way it is. You can ask the seller to make some repairs, or if the inspection is deemed unacceptable, then at that point you can back out of the contract, release the contract. But again, you have that option. I don't consider a home sold until after the home inspection. And let's say they do find high radon. Well, that's not the end of the world. You can ask the seller to install a radon mitigation system. So that's not the end of the world. And then when you're looking at a home, the other thing you're looking at and you're using is your sense of smell. Okay. I was out touring a home yesterday, and lo and behold, guess what? The agent made sure that they were over there before we showed up and had all the windows open. Well, guess what? The thing smelled like smoke. And there's a saying that goes like this: if you can smell it, you can't sell it. And sure enough, but if you if you smoke, and I know a lot of people smoke in the garage, or on the back deck, that, there's wind and all that sort of thing, and that blows right into the house. And that, I'm telling you what, cigarette smoke, or if you smell a musty smell in the basement, that's a telltale sign of water intrusion. And that's, yeah. But use your sense of smell when you're looking at a home, and when you're looking at photos, you can't see, you know, um, smell on a photo. And then the other thing you can't see is when you pull up to that home, you're also looking. I would suggest not pulling into the driveway. I would park outside and then walk up to the house. That way you can see. If you park in the driveway, then you're not going to be able to see the driveway, and you're looking for cracks and that sort of thing. But um, you want to use all your senses, and you're looking at the overall care and upkeep of the overall neighborhood. Okay, so Zareen says, I like trees, but not ones that are too close to the house. Yes, exactly. Me neither. Roots and foundation issues. Amen. Plumbing, all those things you mentioned. Exactly. I'm right with you on that. MH08 says, LOL, ghetto palms, also known as trees of heaven. They grow in poor soil, thus great for Denver. They're now considered noxious in Colorado, but they're everywhere in the city. Okay. And yeah, we have those. They call them. I heard them called opportunity trees. Those trees that grow in between the fence, and then they're like I don't know if it's like a mulberry or something, but those things can go like crazy. And then MH, it says an own ozone generator can take care of the cigarette smoke. Yeah, painting helps, and then removing the window coverings, and cleaning the carpet, or recarpeting the place, that helps too. Or you could also stop smoking, but I mean, I know people, that can be a challenge for folks. And then the other question I have is, how competitive is the market right now? It's at this time of year, it slows down. As we go into fall, we sell fewer homes, but you can bet if rates drop, then it's going to become more competitive, and more buyers will come off the sideline. So, um, and then the final question I had was, what happens during the inspection and appraisal? Okay, they're two entirely different things. An inspection is looking at the overall condition of the house, and an appraisal is looking at the value of the house. So if the lender is going to loan you money, let's say you're buying a $300,000 house, they're going to order an appraisal to make sure the house is worth $300,000. Okay, so that's kind of what an appraisal is. And if it's a government funded home, like FHA financing or VA financing, not only are they looking at the value, but they're also looking for any health and safety issues, like peeling paint, or missing handrails, or tripping hazards, and that sort of thing on that sort of an appraisal. Okay. And then during the inspection, you're looking at the condition. And, let's say a home has been pre inspected. Okay. Um, the seller paid for that inspection. You're still, if you want, as a buyer, just because a home has been pre-inspected, it still doesn't hurt to have your inspector take a look at things. So even if the deal falls apart, you spend, let's say $500 to get the home inspected, it's much better to have an inspection, and then have the deal uh, fall apart, than buy a house with a major issues. And what the problem is, a couple of years ago, people were buying homes and then have to uh, forego the inspection, and then you're buying it as is, and that can be a whole nother animal there. That can, let's see, MH08. It's in the it's been an hour, MH08, so I can only go so long. Flipper next door hates trees. Bought the property and cut down the trees. Now I'm bathed in sunlight all day. Can I sue him for increased AC costs? In today's world, you can sue anybody for anything. So I don't know, but I mean, if it's his trees, then he probably can cut them down. But Yeah, that's, you know, you have to talk to an attorney on that, but you know, I would, uh, all right. Let's see. Zarintha says, is a pre-inspection a good idea? If you're a seller, I think a pre-inspection is an excellent idea because here's why. The issues are going to come to the surface anyway. So why not find out what the issues are, and then you can go in and address those issues. Okay. And then that way and then also uh, you do the pre-inspection. Maybe that pre-inspection is good enough for the buyer, and the buyer says, hey, I don't need to do an inspection. Because if a deal's going to fall apart, it's going to fall apart for two reasons: financing and inspections. So if you can do the pre-inspection and do it up front, and then of course you got to disclose those results of that inspection. But here's the deal: when you disclose those results of those inspections, most people don't read the inspection report anyway. You can put it out there and you're good to go. So um, yeah, pay $500 to save 40,000. Amen. Exactly. All right. And then yeah, we're running past time. Thank you, everybody. Good. Thanks. Thank you. We're closing up shop. And then Clark says, good show tonight, David. Thank you. All right, everybody. Well, hey, and if you have any questions, don't forget to subscribe to the channel. Be sure to stop by Clark and make sure you give the thumb stream a thumbs up. And then if you ever have any questions, or if you're moving to Omaha and have any looking to make a move, either buying or selling, give me a call or shoot me a text. Give me a call. So I appreciate that. We have two more comments. Let's see. Zarintha says, thank you, David. You're welcome. And then MH08 says, pre-inspection shows you the buyer's the buyer negotiation points. And that's true too. But I mean, it's better to be proactive, because then it's better to have the deal stay together. So anyway, everybody, well, I tell you what, I appreciate everybody stopping by tonight. And it's always fun, on the live stream and everything. So I appreciate that. And we're over 6,000 subs. So I'm pretty excited about that too. So I appreciate everybody who subscribes to the channel, and I hope everybody has a great evening, and we'll see you again next week. All righty. Bye-bye.